CPI numbers next week, earnings calendar. That's what we're gonna see this week. Before that, as usual, let's jump with our weekly datas. On the DXY, we faced a 0.7 negative week after a monthly uptrend. We seeing the dollar getting down. On the VIX, we are at 16 points with a 20%, around 18% increase this week. So we came basically from the 13.5 points to the 16. So quite an increase in the fear. If I can say, we might want to have a look to the fear index, like in previous video, in previous episode, I've mentioned we're gonna have a look, but we forgot to mention it. So we're gonna have a look this week to that. There are several points to tackle. We also want to tackle the M2 chart. So we're gonna be quick on those datas. The 10-year, the 2-year Treasury bond is currently at 4.77 with a 1.4% increase this week. The 10-year is at 2.4% increase with a 4.4 yield, and the 30-year is at 4.56 with a 2.5% increase. We're gonna dive deeper in the Treasury bonds later. First, let's also look at the gold with a 4% increase this week. We got a new all-time high. So we're gonna have a look to this chart also. We should notice also the price of oil that is in an uptrend. If we look at the 6 month, we've been basically from the 70s to the high 80s. So that's something interesting. We're not going to look at that chart, but still looking at the oil, maintaining attention on this commodity. The S&P, we've seen basically a downtrend on the S&P going from the new all-time high, basically around 52.63 to closing at currently 2200. As you can read here, the S&P is currently at 2200 before this Monday opening. So I'm actually recording this after at 11, I'm in New York time at 11:10. Don't know if it will be published after midnight like previous one, but so you know when I'm recording this. I've added the Fed funds. I like to say this just as a reminder. Well, you know, I've mentioned it several times, but most of the time on the market, when you see the Fed funds going down, well, most of the time it's correlated to the S&P in the market. So if we look at the 2008 crisis, we've seen the Fed starting cutting rates by June of 2007, and the S&P hit all-time high at this time around October 2007. So if you look at this, that was basically around a quarter before, and just after the Fed started cutting rates, 1 quarter after that, we've seen a major crack in the financial markets. So not saying we'll have the same exact pattern, but if we have something like this, saying the first cut might be after the election, so let's say November, that would lead us November 2024 around here, and maybe that's at that point that we're gonna see a downtrend with the rate going down. So that's an hypothesis. Wanted to mention the 30-year Treasury bond currently mentioned at 4.56. I've added also the 10-year, like the line is the 10-year. The candles are the US 30-year. So if we look at this, we remember we remember beginning of October being at a top from basically close to the 5% at 4.85. We've reached an all-time high at 4.9, and it was at that time that we heard Bill Ackman and all the hedge funds saying we could go higher. But basically at that point the markets turned, and now that was a moment basically we predicted, if you remember, around 6 cuts for 2024. Now the prediction is about 3 cuts. Even some federal governors, like we've mentioned in previous episodes, like the one of Atlanta, is mentioning only one cut in 2024. So that would be interesting to have a look at this. But of course, this chart is quite of the most important in all financial markets, as you might already know. Of course, just a quick look at gold on the weekly chart. We are currently at 2350, so more above the 2300. That's quite a bull run since bottom in October. We can see now around a 40% increase on gold. So that's something we should definitely look at. Looking at Forex factory calendar, last week we've seen mainly NFP numbers on Friday, so came out at 300K, while the forecast was 200K, so about 50% above the forecast. We've mentioned in our previous video about job employment that this could count double jobs. Like if an individual is taking 2 jobs, this could count in, and usually most of the time it's revised in the future. Last week we also mainly had the average hourly earnings. That was at the actual was the same number than the forecast, and the job openings we got also at same number than the forecast at 8.8 million. Next week we will see the CPI numbers forecasted at 3.4, so that's quite high, above the previous CPI, the February CPI. So in February we got a 3.2% CPI number, and we're gonna have March CPI at 3.4% forecast at the moment. We'll see the actual number on Wednesday the 10th. That will be quite interesting. If the number comes higher, that might change a little the Fed perspectives, and definitely tending towards the 1 cut rather than 3 cuts. So that's about the main news. We'll get also ECB, European Central Bank press conference, because they got their refinancing rates meeting this week. So that will be something we can look at also, especially if you're on the Euro USD. About what I've mentioned, basically markets hit turbulence as US CPI and earnings loom. That's the title of this article. We're gonna see the earnings calendar as mentioned in the title. We got the earnings in April of Q1, so that will definitely move the markets. About the rates, I'm on the December FOMC at the moment, and as you can see, we've now come with a higher probability of 2 rate cuts by December, while last week we got a higher percentage for these 3 cuts. Now we are at 32% chance of 2 cuts, and if you add up all of these, it's basically 32 plus 16 plus 3. So that will lead us around 50% chance. That's a 50% chance of 2 cuts or less, or 2 or 1 cut. We are now at 50% chance. So that's quite high. We definitely cannot take it out of the equation in our investment decisions. So if you look at here, you can see that the 32% chance here is a number that was 12% the 7th of March, so 1 month ago. Just wanted to touch base about the rates, quite important. And about the money supply, just a quick word. Money supply is doing something no one has witnessed since the Great Depression, and it foreshadows a big move to come in stocks. As you can see, the chart speaks by itself. It's pretty impossible to find a pattern like this. So we'll see where it leads. But if you look on the 5-year, since actually the top in April, or March, April actually 2022, around 2 years ago, we've reached a top at 21 trillion on the M2, and since then, the money supply didn't increase. So if you look on the long term, we've never seen that. We've never seen even 1 year with a downtrend on the money supply. If you look at the 2008 crisis, as you can see, it never happened. It never happened. That's something basically we've always seen new dollars coming in the market, if I can say so. Will the financial system handle this lack of liquidity, in a sense, with the rate going higher, the inflation going higher, the rates cannot go down? If you remember, that would fuel inflation, basically cutting rates while inflation is going up. And if we got the S&P going down at the same time, that would be a quite new situation. But about finally the earnings, mentioning that I've mentioned before, that would be mainly this Friday, starting with BlackRock, Citigroup, JP Morgan Chase, and Wells Fargo and Co. And after next Friday, we'll got next earnings, as you can read: Goldman Sachs on the 15th of April, and Bank of America, Johnson & Johnson on Tuesday 16, Morgan Stanley. We got Netflix numbers on Thursday the 18th, and P&G numbers on Friday the 19th. We'll speak about the others, but you can read here if you want. Yeah, Google, that would be 2 weeks from now, on the 23rd. And Coca-Cola at the end of April. So the earnings will continue until the beginning, the mid-May, if I should say, with Alibaba earnings, for example, on the 16th of May, as you can read here. The fear and greed index came down, we've mentioned in the beginning of this video. The fear index, the VIX came up to 16 points. So that means the market is more cautious and less greedy, basically fearing more. So if you've been looking at this index in the past weeks, month, we've been more in this 70, 75 area. Beginning in January, we were even at the 80. So now we are at the 60. It came really down. We gonna see in 2 weeks, maybe next week, if we go to the neutral area, that would be something definitely interesting to look at. I'm looking at the other charts at the moment, but as you can see here, we got the VIX in its extreme fear at 16. So that's quite interesting. You can pause the video, and if you want to check the numbers, or directly you can go on that website that is editions. Yeah, it's on CNN, the fear and greed index of CNN Business. So that will be all for this week. We should talk on next Sunday, and wish you all an amazing week.